Hey, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today's the 6th of April, 2023. So, welcome, everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets. A few of the charts, the usual stuff, basically. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear here for a little bit and then, we can resume. Okay, so now then, also just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. Check out our trading conditions. I mean, if you want to work with us, let's say be an affiliate or something like that, like then yeah, you can always reach out to us. You can reach out to me. We can have a chat about it. So yep, guys, check us out. But for now, let's jump into the charts. So, okay, right, Nikkei 225. We had a beautiful, from the technical perspective, we had a beautiful decline here. And look, I mean, I'll just quickly pick up on everything what I said in the beginning of this week. Basically, I said that, hey, if we do fall below this 27,863 and this 23.6% retracement in the Fibonacci, then yes, I'm going to aim for that 38.2 or even this 50-day EMA. Well, we got my targets. Everything's perfect now, so I reached my area. So yep, great end to this week. And by the way, if you don't know, then yes, tomorrow the markets are going to be closed. So that's why we have a bit of a data dump today happening from Canada, from the US. US will still deliver tomorrow the NFPs, but yeah, the other data that's going to come out today. So we'll have the initial jobless claims as usual on Thursdays. We will have some information from Canada coming out. So the IBPMIs, the employment numbers. So keep your eyes on that. So it could be quite an interesting day today because of, like I said, the fact that tomorrow we are going to be closed. Yep. So let's see how this is going to play out. Of course, tomorrow, as I said, yes, we have the U.S. non-farm payrolls coming out, although the market is closed, and that's why it's going to be very interesting Monday morning, I believe so. So we'll have we'll keep an eye on that. Now, look, without any further ado, like I said, looking at the technical picture here on Nikkei, okay, great. We did decline. Oh, by the way, the webinar for tomorrow, it will happen. So, yep, I'm going to be picking up on stuff. Maybe just it's going to be a bit of a, a recap of everything. But look, for today, for example, with Nikkei, I mean, Nikkei is already closed, but in general, if tomorrow it's going to open up, and looking at the picture here, you can see basically that yes, we found good support near the near this 50-day EMA. We rebounded a little bit, and we kind of drifted back to that 38.2% retracement on Fibonacci to test it from underneath. Well, at this point, like I said, I'm going to play a bit of a waiting game because excuse me. Oh, there we go. There, my voice goes down again. Excuse me about that. Look, with Nikkei, in general, given that we had quite a significant decline, and in a way, if I put a weekly chart, weekly candle chart, you can see that we almost we wiped out most of the gains made last week. So again, quite an interesting situation here. Look, if we do push back above the 38.2, I will consider something like this. I will consider something like this where we could go back to test the 23.6% retracement on the Fibonacci from underneath, and if it provides good resistance together with the 27,863 territory, then another decline here could be possible, where I could start aiming for my upside line taken from the low of the 15th of March of this year, and then we will take it from there. Now, in terms of getting a little bit more comfortable with the upside, well, I will start looking at some higher levels if we do push and stay above the 23.6 here. Then I'll target the 28,393 territory right here, the one that provided fantastic resistance. It's also, by the way, the inside swing low here of the 8th of March, and then we'll go further up, to the upside. Again, at the moment, what I'm watching here, of course, is the 38.2. If we push back above it and stay above it, I'll consider maybe a bit of a larger correction here towards the 27,863 or that 23.6% retracement on the Fibonacci, and then we will take it from there. Now, the ASX 200, very quickly on this one. Look, we fell below the highlighted zone right here. We fell below this territory. I'm not saying that I'm becoming very, very bearish or something like that. No, we just fell nicely below it. Okay, that's fine. Getting that little correction here, and in general, if you want to apply the fibs here on this one, then you'll see that, look, if we draw it from the lowest point of March to the current highest point of April, you'll see that we have like an opportunity maybe to go towards that 23.6, somewhere around here. Maybe, depending on how this is going to trade, maybe we could see the EMAs here, the 50 to 100-day EMA approaching this territory as well, and then maybe providing good support. So just kind of keep that in mind. Look, for the upside, I would need to see the index kind of traveling back above the this highlighted zone of mine. I talked about it before, the 7,245.60 area between those two levels. So yeah, if we clear that one, then I'll go a little bit more to the upside. If you're a little bit more on the careful and cautious side, then of course what you can do here is just keep your eyes on the current highest point of April near the 7,000 and 7,293 territory, approximately around there. If we clear that, this will confirm a forthcoming higher high and potentially could attract more buyers. But like I said, I'll start already looking at some higher levels if we do push. Oh, my voice is going down. If we do push back above this highlighted zone right here, but at the moment we're below it, so maybe a bit of a retracement here could be possible. Now, India's Nifty 50, guys. So, okay, look. This one's interesting, again, because we broke the downside line. And this one basically is also getting some support from the Reserve Bank of India that kept interest rates today the same. So, yep, the market is seeing this as a positive. I mean, there's no tightening, so yeah, at the moment we're seeing a nice little technical setup here. What I said before, that if we break the downside line here and we clear all the EMAs, then yes, I'm going to go slowly to the upside, initially of course targeting the highest point of March. If that gets which is, well, let me just put this one there we go. So the highest point of March near the 17,867. Then of course it could, if that gets cleared, then we could go further north, and so on and so on. But again, at the moment, at this point, I would say let's be careful, let's be cautious. Yes, we're pushing a little bit more to the upside, but we need to see the body of this kind of this daily candle kind of staying above all the EMAs, and then I'll get a little bit more excited with further upside, and by further upside I mean the current high, well, not the current, but the highest point of March near the 17,867 territory. Now the S&P 500. So yesterday we got a hit. We declined, of course, as you know, if you were following the data. Yesterday we in the US, and there was a bit of a decline in everything, to be honest, everything that was coming out. So ADPs declined. Let me just open up the calendar very quickly. So yeah, ADPs declined. ISM non-manufacturing declined. What else declined? Crude oil, no, crude oil went higher. So ISM non-manufacturing prices, PMIs, new orders, employment, business activity went up, but the rest. Oh, and yes, of course, the services PMIs also went down. So yeah, okay, look, for now, and of course, as I mentioned already, ADP. So this, of course, created that little kind of shake-up in the market. So to be honest, so far so good. I talked about this. I looking at from the technical perspective as well. I said that, hey, look, maybe we could get a bit of a retracement here if we fall below this 4,115 territory. I'll lean a little bit more to the downside. Yeah, so far so good. And as I said, I'm going to be aiming for the crossroads here of these two trend lines. Okay, that seems to be working out. Look, in general, the market is very interesting right now because, again, we're getting that bad data, and the market, yes, of course, is kind of getting a little shake up. And now everybody's talking about the May meeting of the Fed, where they will. Well, this is the question: will they actually go for a rate hike, or will they stay on course, or actually they will slow down the pace? Well, look, we saw this week Australian central bank kind of not doing anything, not increasing. However, the New Zealand central bank did increase by more than expected. So yeah, look, at this point, I would say the Fed Watch tool is showing us like 50-50 basically. So it's gonna be like that, I think. Again, don't take my word for that, but I think it might stay like this all the way throughout April. It's just like uncertain, this no clarity, no nothing. Maybe some data could drive it. Like, we'll see how the NFPs come out, of course, but that's going to be only one set of data. We'll get the reaction, and then we'll have some other data sets coming out next week and the week after, and it's going to be all over again, all the way towards the meeting, I think, and to determine what's going to happen further. So where it's going to get determined what's going to happen further. So look, at this point, I would say play the cautious game. Look, coming back to the technicals here, what I'm looking at here on the S&P, for example, I'm keeping an eye on the on this little, like I said, this little crossroad. If we do test it and then rebound, even if we kind of break it lower or something like that, but still we end up pushing back up by the end of the trading day and stay above it, then yeah, I mean, look, I'm still considering something like that to happen. I'm going to stick to my guns unless we start falling below the this highlighted zone right here, because at the same time we would fall below the crossroads of these two trend lines, and this may attract a few more sellers into the game. But this is where I'm going to lower my arrow a little bit, make it smaller, and I'm going to aim for the 50-day EMA initially. If that gets cleared, then I'm basically, in other words, I'm going to aim for my EMAs. Simple as that. Then I'm going to relook the whole thing, and we will then take it from there, basically. But like I said, at this point, as long as we stay above this upside support line or even this downside support line, I will class that as a temporary correction before another possible leg of buying. So if you're not really comfortable with this scenario, you can keep an eye on the 4,168 territory. A nice good pop above it may attract more buyers, and this would confirm a forthcoming higher high. And yes, more like I said, more bulls could run into the field. DAX, the German index. So this is what I talked about yesterday. So look, I said that as long as we stay above this upside line, even if we fall back below this highlighted zone, which is approximately around that 15,700 zone, if we do drop back below this highlighted zone and then yes, maybe there could be a chance for maybe a correction to the downside. However, look, we broke the upside line, so this kind of straight away gives me an indication that, you know, we're not really feeling well here on the DAX, and of course we, as you know, I don't know if you know or not, but there are some reports coming out that yeah, there's a lot of BaFin, which is the German regulator, is getting a lot of complaints from, you know, from people about the financial institutions in Germany, and that, you know, the terms and conditions changed, the account closures are kind of on the, you know, are slow, so, you know, not very good. The financial system, the German financial system, is a little bit shaken, of course, after the whole kind of also well, Credit Suisse and initially, and then spilled into Deutsche Bank, and, you know, and yeah, now we're getting these little complaints in Germany from to BaFin. So again, look, I'm not saying that, you know, you suddenly have to switch on to panic mode. No, this is just maybe a hiccup. Look, at this point, I would say we fell below this upside line, so I'm kind of cautiously leaning to the downside. However, I think to be a little bit more careful, I think we need to go back to my level, the 15,500. Again, I understand that we fell below the 15,700 zone. We broke the upside line, but you know what? Something tells me here that I think that this, okay, first of all, it was a tentative upside line. We can get rid of it now. I'll stay with my 15,700 zone because I want to see what's going to happen here. Because again, looking at the weekly, yes, we stayed above this barrier, but now we're drifting back down. I want to see if the weekly candle stays, you know, above this territory, above that 15,700 zone. If it does, great, I will go higher. But if it struggles, well, then maybe this could, you know, open the door towards some lower levels. However, to be a little bit more, like I said, on the careful side, a drop below the 15,500 zone would be needed for me here. So, and then I'll take it from there, guys. The USD, which is DXY here on our platform. Look, DXY dollar index yesterday pushed nicely to the upside. Of course, weaker data kind of initiated the fact that, you know, hey, maybe the Fed will, you know, will slow down or something, you know, then it actually, I think, or actually no, I do apologize, let me reiterate that I think they would reacted more as a safe haven, to be honest. So okay, right. So yeah, US dollar, I think they reacted more of as a safe haven, and pushed back up, pushed back above this 101.55 territory, and of course now what I'm seeing here is a bit of a mess. So look, I think that it's time to just remove everything, and remove all the yeah, the drawings, and let's have a fresh start. Well, first of all, we can see that we are still trading below all of the EMAs here on my daily chart. So in a way, the downside scenario is still not off the table. But we are above the 100.67 territory. So basically, if you're looking for some lower levels, I think that the easier path is to wait for a drop below this territory, this one right here, and then go to the downside. Because at this point, yeah, I mean, look, we are pushing back up, or at least trying to. But again, there are some obstacles on the way higher, which could be in the way a little bit. Like, for example, this one, the 101.72. So I'm kind of, by the way, redrawing some levels because, again, some work out, some don't. So let's simplify our lives a little bit here. So yeah, if you're looking for some higher levels, then maybe a push back above this territory could be good. However, don't rush into too much upside, because basically that's why my error is something like this, because we have a downside line right here, taken from the high of the 24th of March. And look, I'm gonna consider everything that I can have, that I can see here, that I can spot on my chart. So this is more of a short-term analysis in this one, on this one. So it's not really more of a, like even a medium term. I'm not talking already about a long term. This was a short term, because again, we're in a tricky spot right now. Well, to be honest, as always. But we are right now in this area where we have to be cautious, because again, it's starting to develop as a roller coaster ride again. And that's why if we push back above the 101.72 territory right here, I will consider a move higher a little bit towards this downside line, and then I'll take it from there. If we break the downside line, great, I'll go further north, but not at this point. At this point, I'm just observing the price action. If we start falling below yesterday's low, which is roughly around here, near the 101.09 territory, then yes, this could open the door towards this highlighted zone, and then so on and so on. So, jumping into gold, guys, very quickly, look at this beautiful move. Look, I talked about this idea. And yes, we got a nice rising channel. So yeah, look, I removed my triangle pattern yesterday because we broke the upper side, so no longer needed, no longer valid. Look, I talked about this as well. I said that, hey, we might travel higher, we might test the upper side of this potential rising channel. We did, and we confirmed the rising channel now, and we drifted back to the downside, where we tested that 2010 territory. So we retraced nicely, and I think it's going to be 23.6. Let me just double check. A little bit more than that. So okay, so we retraced a little bit more than 23.6. So yeah, look, I'll remove the Fibonacci's. The fact that we are still trading above that 2010 territory, okay, that's great, that's interesting. Let's see how today's data is going to come out. Like I said, maybe we'll get a nice boost here, and we could push back up towards the upper bound of the rising channel. But if we fall back below the 2010 territory, of course, keep your eyes on the psychological 2000 mark. If that gets cleared, well, we could go further south. So, long story short, guys, at this point, I will say I will consider a bit of a decline here if we do fall back below the 2010 zone. I'll consider a move towards the psychological 2000 level. But if we continue to trade above this territory, above that 2010 zone, I'm still going to be examining this scenario, this potential curved up move. Silver, also the correction, that's fine. Look, I mean, the 25.14 barrier held nicely here. We declined, we corrected, but again, this is what I'm saying. So we tested my level perfectly, the 24.64, or I should say the area near it. That's great. Okay. Look, at this point, I'm the same story as with gold, actually. So I want to see if this continues to hold, if this 24.64 territory continues to hold. If it does, then maybe a rebound like that could be possible. If it falls below it, then I'll consider a larger correction to the downside, because again, we're still above this upside support line taken from the low of the 21st of March. Now, jumping into oil. So yeah, oil. So yesterday, crude oil inventories increased. Let me just double check. Yep. Yeah. Crude oil inventories. Yeah, they actually increased. Actually, the crude oil inventories went the minus went higher. So yeah, the inventories have dropped. There we go. Inventories have dropped. Of course, this should have been seen as a positive for oil, but I think that because the dollar index rose, and that's what put the pressure on. We didn't drop heavily, okay, because of the positive to oil data came out. But the fact that we fell is it's the fact that the dollar index did rise, and now the question here is, if the dollar index continues to rise, then maybe we could consider this scenario of mine, where I'm gonna consider maybe a larger correction before another possible leg of buying. So for that, I need to see a drop below the 79 territory. Look, until we're here, we're below the 200-day EMA, below my highlighted zone, which I'm strongly still sticking to. And as long as we remain in this zone right here, I'm just observing the price action, guys. I'm not really doing much. just watching this. But yeah, once I start seeing one of my areas getting cleared, that's when it could become a little bit more interesting. Bitcoin. So, okay, this one's not doing much. We're still kind of ranging, so I'm not going to spend too much time on this. So, yeah, we're still stuck in this little territory between the 26,550 and the 28,900 and, well, let's round it up, 40, 50 approximately, or actually the 29 territory. So, yeah, we need to see a clearance of that 29 zone in order to go higher. At this point, I'm just watching this. Yeah, it's not really doing much here for me. I don't like these scenarios, so I'm just observing the price action. But once it starts clearing one of the sides here, let's say the 26,550 or the 29,000, then I'll consider the next short-term directional move. Ethereum, still above the 1846, 47 territory. Okay, that's great. So yeah, yesterday we traveled higher. We reached, then of course, we reached the 1900 level. I talked about that, and okay, one of the targets got reached, and of course my next target is the psychological 2000 mark, together with this 2019 zone, which is the highest point of August of last year. Now look, I will say it this way: as long as we stay above this 1847 zone, I will continue targeting that 2000 mark. If we suddenly drop back below this hurdle, this is where I'm going to zoom in here a little bit, then maybe a bit of a retracement here could be possible. But again, look, the issue that I would have here from the shorter term perspective is a few of these trend lines. Now, again, don't get me wrong, a bunch of them are going to be tentative, very tentative, but nevertheless, I'm gonna keep a careful eye on them, because again, maybe one of them will do the job and provide support. But if they start breaking, this could be a good indication, a good way to position yourselves, maybe for a bit of downside. But again, you have to be careful because it could change very quickly, and this is crypto that we're talking about. So stop loss is much needed, much required actually, and of course only you can only risk what you can afford to lose. Just kind of keep that in mind, guys. Look, in terms of the Dogecoin, by the way, Dogecoin, so far so good. I talked about this in the beginning of this week. This is like that little Elon's coin. Yeah, so great manipulation on that side. Wonderful. I mean, I'm just I'm enjoying them. It's so really entertaining to watch, honestly. But it's great. Look, what's happening here? Basically, we had a hold up. I talked about this hold up near this 0.10 zone, and yes, we're getting that retracement. Then I talked about the 0.920, 0.0920 zone. We reached that. Now the question here is if we can drop and stay below it. If we can, then I'm aiming for although I have my arrow towards this upside line, but actually I'm going to be aiming for the EMAs first, the 200, the 100, the 50, and then I'll take it from there. So at the moment, yeah, it's like that. If I want to go higher, so just a simple approach here, push through that 0.10 zone would be required, and then we could kind of take it from there. Now, jumping into a few forex currency pairs. Yep, AUDUSD. So this is where it's interesting. There we go. Now, look, after we had a beautiful break here through through this downside line, what I talked about, and I said that I'm going to be aiming for the 200-day EMA. We reached my target. Then we started correcting. I said, look, we might end up testing this downside line from above. Maybe it will provide some hold up. Maybe it will provide a little hold up here, but I said if we start falling back below it, then this is where we could maybe take a bit of a cautious approach, because again, look, my downside scenario is still from a break of this upside line. Until then, I am not okay. Yes, we are declining, but look, it could still rebound. It could still push back up towards to the upside. So that's why I need to see my clearance here of this upside line, and not only a break here. I don't want to see a false breakout, so I want to see the pair kind of staying below this upside line, and then yes, I'm going to aim to the downside. I can see there in the chat room, Sahil Shingala 90. Sell now. What are you referring to? It would be great to know what are you referring to, because again, I moved away from maybe one of the instruments in the. I'm assuming one of the instruments here that I already spoke about, but which one exactly? I would be very interested to find out actually, because you're saying sell now. I want to know your kind of your opinion on this. But look, AUDNZD, my beloved pair, currency pair. I really like it, and yeah. We drifted nicely to the downside here. We broke the lower side of the range, so everything. Look, I talked about this already yesterday. Then I said that, look, keep your eyes on this hurdle, this 1.0623. Maybe we could get a little retracement here. We did get, we're getting that little retracement. Now the question, can the lower side of this previous range be a good area of resistance? If it can, okay, wonderful. I will consider another move to the downside. If we somehow move back inside the range, in that case, I'll jump into a weekly chart. I want to see if this is going to be one of those pain in the, where moments where, it's going to, on a weekly candle, it's going to create this false breakout and, stay here and then maybe move back up next week. But again, this is me getting ahead of myself. Let's first of all, let's see what's going to happen here with this 1.0675 territory, if it's going to provide resistance or not. If it does, then yes, another decline here could be possible. But if we push back inside of it, well, this is where I'm going to take a neutral stand again. But I like this pair, and let's see what it does next. Maybe it's going to go towards the upper side here and try to break the upper side of the range. AUDJPY. So yeah, look at this. I talked about this 88.55 territory. I said if we fall below it, I'll go lower. My next target is the 87.41 or 87 zone. Look, so far so good. Yes, we are correcting right now a little bit back to the upside, but hey, if this territory provides resistance, this 88.55, another decline here could be possible. So let's keep that in mind. But yeah, at the moment everything's okay. Look, I don't have much to say here. Yes, we saw this pair declining because again the yen buying resumed. Whenever we have a decline in the stock market, we have the yen kind of picking up the pace. So yeah, at this point, that's exactly what's happening. However, a part of me is okay. It's always like this, a part of me is conflicting with myself all the time. So I have a constant battle inside of me. Who's, which one is it, up or down or up and down? Look, in this scenario, what I'm keeping an eye on here. Even if we do retrace a little back more to the upside, 88.55 territories. This is what I'm looking at. If we climb back above it, I'll take a neutral stand, because this is where it could start shifting maybe back up. And the reason why I'm talking about back up, again, if the stock market rebounds, and this is what I talked earlier, for example, with the S&P, let's say we do rebound and push back up, then yeah, maybe we could see this pair moving higher again. Maybe this little moment here could be, actually, let me just grab an ellipse. So maybe this could be something like that, guys. Oh, I think I need to shift this a little bit to the side. Let me just, grab something like this. There we go. So maybe this could be seen as a little lower high. Sorry, higher low. There we go. Yeah, so maybe this could be seen something like that, because we had our low here. We're reversed to the upside. We tested a key important resistance barrier here, the 90.23, and we drifted back down. But now we're saying this little moment here, maybe this could be seen as I said, a little a higher low. If that's the case, maybe we will go for a higher high. In that case, we need to see a break of this downside line, a break of this barrier right here, and then yes, this could confirm a higher high. So that's why be cautious, be careful here. In general, yes, I'm leaning a little bit more towards the downside, but if it changes very quickly, then yeah, I'll have to just kind of jump into different boots and you know, start looking at some higher levels. But look, I'll start considering some higher levels on a break of this short-term downside line taken from the high of the 21st of February, and then I'll of course you know, I have, you know, you need to have your stop losses in place here, of course, because then suddenly if this goes all down the drain again, you know, then you're out of the money. But look, at this point, just kind of keep that in mind. In NZDCHF. So I talked a lot about this. I talked about the triangle here, the little squeeze. Look, yesterday we had a nice, beautiful pop here. That's of course the, you know, thank you very much to RBNZ. And we pushed higher. We broke the downside line. We moved above the 0.5772, but we failed to stay above both of these, like the barrier, the downside line here, and we've drifted back to the downside. And this is where I said be careful. Now, look, we are still in the triangle, in the squeeze here, but we're kind of flirting with this upside line. And this is where my curiosity kind of is, you know, killing me right now. What's going to happen further? Well, if the stock market does decline a little bit, maybe, you know, safe havens like Japanese yen and Swiss franc, don't forget about Swiss franc, could pick up the pace a little bit, and we could see NZDCHF moving nicely to the downside, breaking the upside line. I'm not saying we could, you know, drift heavily to the downside here. No, my first target will be the 0.5664, and then if we clear that, then the 0.5620, and so on and so on. But still, a clearance here is needed. So until then, I'm just observing the price action. Now, jumping into USDJPY, guys. So, USDJPY, beautiful test. Well, actually, test of my area near the 130.54 level. I talked about this. Said if we fall below this little territory here, below the 132.82, then I'll go a little bit more to the downside. Yes, I would say, yeah, great, wonderful, good result. And look at how well this territory is playing out. So let me just grab a highlighted zone here. Oh, an extra arrow picked up. There we go. Not this one. This one. So, yeah, again, once again, it's providing good support, rebounding from it. My question here right now is what's going to happen? Well, what's going to happen further? Because, look, in general, I am kind of struggling with the upside scenario, I think. So what I'm considering here, and I think I need to do this, although I don't like it, but I think I have to admit this, that we could be forming a range, and I really don't like. If you're a range trader, congratulations, guys. I keep on saying this all the time. So if you're a range trader, great, wonderful. This could be for you. But look, if we want to go higher here inside the range, for example, then maybe a push above this little territory could be ideal, the 132.20. It's near the midpoint of this range, near it. So, you know, maybe something like that could be possible here. We clear this 132.20 and then we go a little bit more to the upside. Now, of course, whenever we're in the range, we kind of, if you're not a range trader, then yeah, you need to wait for the exit. And I'm waiting for the exit. I'm going to wait for this one to make a move here. And if we do clear one of the sides here of this range, then I'll consider the next short-term directional move. USDCAD. So there we go. Look at this, guys. I kept on talking about this one from the beginning of this week. Look, we pushed above the 1.3441. I talked about this as well. We pushed higher. We reached my target, the 1.3488. Great. Look, I talked about this yesterday. I talked about this barrier here yesterday. Look at where we're getting a wonderful hold up. However, IVP today, Canada. I'll check out the economic calendar. What time it's at your place, wherever you are. That's where it's going to be interesting. I mean, look, we have some data coming out from the US, from Canada, and it's the last kind of trading day before the market is closed tomorrow. So I'm talking about the US and most of the Western European, well, actually all of them, I think, all the Western European indices. So yeah, they're all going to be closed tomorrow. However, as we know, the NFP data is going to be coming out still, so that's going to be an interesting one. Sorry, Monday is going to be an interesting one. But don't have any. I would strongly recommend, if you do like to keep positions overnight, I don't know, maybe it's not the time to, to hold them. And okay, it might work out suddenly, in your favor, but in that case, you have to admit the fact that if it doesn't work out in your favor, I mean, it goes against you, then you're kind of you're risking a lot on your capital. So yeah, guys, but you can always, of course, check out our platform. We do have guaranteed stop losses on our platform, so just check out that. Go into easymarkets.com and you'll find more information there, or you can reach out to us. Now, look, coming back to USDCAD, here I would say, at the moment, yes, I'm just observing it. I'm not really doing much here because, look, for my downside, I need to see a drop below the 1.3415 territory somewhere around here, because at the same time we would fall below the 200-day EMA. Look, I'll already start looking at some lower levels if we do fall below the 200-day EMA, which is approximately around that 1.34200 zone, 1.3420. Sorry. If we clear that, then yes, this could attract a few more sellers. What the thing that we're forming here right now could be classed as a bearish flag, because again, we have our pole, we have our little correction here to the upside, so maybe this could be forming a pennant or bullish flag, or a bearish flag, a bearish pennant. So keep that in mind, guys. For the upside, I'm gonna take a bit of a conservative approach here, and I'm gonna raise my arrow here from this barrier right here, the 1.3537. Look, you can start looking at some higher levels from here, from this area, from the 1.3488, but just be very, very careful. I mean, we could travel towards the 100-day EMA, get a hold up here, and then move back down. So just be cautious on that one. GBPUSD, GBPUSD, guys. Here we have a correction, which yeah, we're testing this 1.2444 territory nicely. The question is, can we stay above it? If we can, great, I'll go back up. If we cannot, I will consider a bit of a corrective move here lower. Now, my arrow is drawn all the way here, but I have to say that, hey, maybe, it's something around this line here. Maybe this could be the upside one. But again, it's a tentative one, because some of you might say, hey, but what about this one? It's another tentative upside line. And maybe some of you might say, but hey, what about this one? And it's another tentative line. So look, we have a bunch of these lines, which I actually want to get rid of for now. I'm just going to keep it simple. And look, if we do fall and stay below the 1.2444 territory, I will consider maybe a bit of a retracement here. Euro Aussie, again, finally, honestly, look at this. Look at this false breakout. I mean, this is just amazing. I mean, this 1.6254, I talked about this and I said, keep your eyes on this one. If we break above it, we could go higher. Yes, we went higher, but look at this. By the end of the trading day, it kind of reversed all to the downside, and we stayed below this barrier. Look, honestly, I'm gonna mark it. I think it's so important, becoming so important. So yeah, this barrier here, keeping close on it. Right now, we're pushing above it again. Again, I want to see how today's day is gonna play out. But here, looking at this picture, I am leaning a little bit more towards the upside again. But again, I want to see how the day is going to end, if we're going to stay above it or not. If we can, then yes, I will go further north. If we cannot, it's back to the drawing board. And first of all, up this upside line can go, no longer needed. But if we start drifting below the 1.6139 territory right here, that's where I will get a little bit more comfortable with some lower levels. EURGBP, yes. Look, I said it before when I was picking up on EURGBP. If you remember, if you watched my videos before, I said, look, what I'm gonna do here is I'm gonna just take a very simplistic approach on this one, because I really don't like this pair, but I still look at it, and I am gonna take a very simplistic approach on it. while we're oscillating around all these EMAs, so for example, if we, I'm gonna kind of aim for those. So inside here, so let's say I said to you before that if we fall below the 100-day EMA, then I'm gonna aim for that 200-day EMA. Boom, boom. We reached that. If we climb back above the 100-day EMA, I'm going to aim for the 50. If we push a bit back up, back above the, or we push, let's say, above the 50, yes, great. I'm going to target my, let me put this on the chart. I'm going to target my downside line here, which could still be a tentative one. Don't get me wrong. It still could be a tentative one, so just be very careful here. But at this point, look, given that we have declined already, so I want to see a drop below the 200-day EMA in order to go lower. We do have these obstacles here on the way to the downside, but yeah, if those get cleared, a forthcoming lower low would be confirmed, and then we could take it from there. Then we could aim for this 0.8691 zone, and so on and so on. And yeah, so finally, Euro USD. We've drifted back inside the range. And I think that maybe, yeah, we need to get rid of this range. I think that we need to redraw a few things here. Look, I'm going to remove all the drawings. First thing first is the fact that we are, yes, drifting back below this territory, below the 1.0930. Okay, interesting. Now the question is, are we actually going to be respecting something like this here? Like an upside line here taken from the low of the the low of the 15th of March. Will this get respected? If not, then my next target is the 50-day EMA. So this is all my short-term scenarios. So basically, there is still hope for the bulls to step in here from maybe a rebound from this upside line, but actually, at this point, I will take a bit of a conservative approach here. And yes, okay, first of all, I'm gonna keep an eye on the 1.0930. Yes, if we push back above it, I'll aim for the 1.0973. But if that gets cleared, that's where it could become a little bit more interesting. We could start aiming for that psychological 110 zone, or even that 11033, which is the highest point, the current highest point of this year. If we clear that one, a new high for this year would be confirmed, and maybe we could go all the way towards that 112 or maybe 14 zone, 15, something like that. So look, I do have a good area right here. Watching this one, so that's the highest, the high of March, if I'm not mistaken. Let me just double check. Yeah, that's the high of the 31st of March, by the way. Near the 1.1185. But again, we'll get to that point if we do push through one of all my barriers here, especially the 1.1033. But before that, we need to get to that point. So that's why I'm looking at, these scenarios here from the short-term perspective. For the downside, yes, as I said, a break of this upside line is needed. If you're looking at this hurdle, the 1.0788 could be a nice good target as well. But if that gets cleared, we'll go slowly to the downside. So guys, that's it for this session. Look, tomorrow I will jump into my videos. We'll see how today's day is going to trade. Just going to pick up and talk about that. It might be a quiet one. Probably most likely it's going to be a quiet one. So maybe we could just look into some other stuff. Maybe some exotics. Some stuff that I like to look into and pick up occasionally. Yeah, maybe we could then see how we can what can we expect for next week. But yeah, guys, look, if you're not gonna join me tomorrow, then have a nice holiday. If just one, like I said, strongly recommend not to hold any positions over this period. But yeah, if you do, well, I mean, I don't know, put your stop losses at least, have your stop losses in place, risk only what you can afford to lose, guys, and everything will be fine. So thank you very much. I'll see you tomorrow at 6 o'clock GMT time for those who want to join in. For those who don't, then I'll see you on, well, Monday, Tuesday, whatever whenever you're back. But yeah, have a nice time, guys, and I'll see you tomorrow. Bye-bye.
Uh-oh, you just broke a digital image cursing us all to 7 years of market volatility. Undo by subscribing to our channel.